Welcome to The Capitalist Compass, the podcast that decodes the free market to help you live a prosperous and independent life. If you're ready, let's dive in.
Have you ever had that feeling, that sort of background hum, like you're constantly being, I don't know, pushed towards investing, even if you don't really think of yourself that way as an investor? That feeling that you have to do something with your money, otherwise, otherwise you lose out. It seems really common.
It is. And today we're doing a deep dive into exactly why so many of us feel that way.
Great.
You are not an investor, but you are being forced to invest.
Oh, yeah.
And it's not just, a cultural observation. It points to these underlying financial forces, these mechanisms that create this pressure on your money pretty much universally.
Okay, so let's unpack that. What's the main driver here?
Well, the fundamental reason is pretty stark, really. Keeping your money just sitting there, idle.
Yeah.
Its value is constantly going down, depreciating.
Right. Inflation. The same money buys less over time.
Exactly. So you feel compelled, almost forced to do something, anything, just to try and preserve its value, its purchasing power.
It feels like a treadmill you didn't exactly sign up for.
That's a good way to put it. And what's really fascinating, or maybe a bit sobering, is the reality of the investing world itself.
What do the sources say about that?
They reveal that actually a very small percentage, something like only 5% of investors will make long-term profits.
Only 5%? Wow.
Yeah, and even fuel will actually beat inflation consistently. But here's the kicker. 90% of people think they're in that 5%.
90%. That's a huge gap between confidence and reality. I wonder how many listening now are kind of thinking, yeah, I reckon I'm in the 5%.
It's human nature, maybe, optimism bias, but it's a significant disconnect.
Okay, so some people might think, all right, I'm not an expert, I'll just use a mutual fund, trust the professionals. But your sources suggest that's not a complete fix either.
No, it's not a guaranteed safe harbor, because while the pros are managing the assets within the fund, the crucial decision, the timing.
You mean when to actually buy the fund or when to sell it?
Exactly. That decision to buy and sell the fund is still the investor's decision. It's still on you.
So you haven't fully delegated the risk.
Yeah.
You're still making critical calls.
Precisely. Which brings us to that common idea of letting money work for you, creating passive income.
Which sounds great, obviously.
It does, but the source suggests it's often a misconception for most people, for that, 95%.
How's that?
Because genuinely making money work for you, beyond just keeping pace with inflation maybe, requires real skill. It takes dedicated time, effort, and a lot of accumulated knowledge. It's not really passive for most.
That makes sense. It's not just set it and forget it if you're still making the key entry and exit decisions.
Right. And this leads to a bigger systemic point the sources make.
Okay, what's the bigger picture?
The argument is basically that inflation forces people to invest. And because most people, the 95%, lack that deep investment knowledge or skill,
Their money ends up.
it tends to flow over time from that 95% who often make mistakes or lose out towards the 5% who really understand the financial system and how it works.
And the source presents this as a major cause of social inequality.
That's the connection they make, yes. A systemic transfer driven by the need to escape inflation.
That's quite a thought. So the source then does this thought experiment, right?
Yeah.
Imagine a world without inflation.
Yeah, it's powerful. What would change? Well, first, prices would be stable. Retirement planning, suddenly much more straightforward.
You wouldn't need to constantly worry about your savings eroding.
Exactly. That pressure, that forced investment would disappear. People could focus more on, what they're actually good at or interested in without this constant financial anxiety.
And what about asset prices, like stocks or houses?
They'd more likely reflect their true performance, their actual productive value, rather than being inflated by this wave of money just looking for any return to beat inflation.
So less speculation, maybe?
Potentially. And companies, they'd be forced to create productivity, real value, rather than just benefiting from asset inflation or cheap capital flowing from compelled investors.
Interesting. And the financial sector itself?
It would likely shrink, lose some of its, quote, sexiness, which could free up talented people, the mathematically gifted, to pursue, new innovations in science, tech, other fields.
That's a fascinating alternative picture. But okay, back to reality. The source admits no inflation is impossible.
Right. That world is hypothetical. So we live in this world with inflation. How do we navigate it?
The source notes many bright people flock to finance careers, but it asks a pretty tough question.
Which,
Basically, can you, meaning the average person, compete with those who have a natural talent for numbers and investment? What if your skills, or your family's skills, lie elsewhere, like, say, in cooking or art or more sensory things?
it's a valid point. Not everyone is cut out for or interested in deep financial analysis.
So what's the advice, then, for us, non-investors who are still caught in the system?
Well, the source offers something practical. It says, look, some financial knowledge is unavoidable now. You can't ignore it completely.
Okay.
But it doesn't necessarily have to be serious investment knowledge, like trying to pick stocks or time the market.
So what kind of knowledge is useful?
Focus instead on knowledge on how to save money from depreciating, which the source argues is definitely easier than investing.
Protecting what you have, rather than aggressively trying to grow it and risking losses in a game you might not be equipped for.
Exactly. Managing the downside of inflation rather than trying to hit home runs in the investment market.
Okay, that seems like more manageable advice for many people.
And the source even hints there's more to discuss later, challenging ideas like mild inflation being good for the economy, promising some important empirical evidence. So maybe more on that another time.
Interesting. Well, we've certainly explored some of these intricate, maybe almost invisible forces that push us towards the investment world, sometimes, maybe often, against our natural inclinations or skills.
Yeah, it seems clear it's a system that, by its nature, keeps money moving, whether you consciously choose to play the game at a high level or not.
It definitely leaves us with something to think about.
It does. Like, how much of our financial activity is genuinely free choice, and how much is just reacting to the system we're in? And maybe what value should we, as a society, place on skills and talents that aren't about maximizing investment returns?